something huge really is about to happen. Nvidia, now a $4.6 trillion giant with the heaviest weighting in the S&P 500, reports earnings this week, and options traders are expecting a 7.5% pop in either direction. Meanwhile, grocery prices just hit a new record, and Walmart earnings are about to tell us how close consumers are to cracking. Later on, a surge in corporate bankruptcies, and this week might be the biggest test the market has faced all year.
Over the past couple months, traders have been talking about a possible AI bubble, and searches on Google Trends just hit a new record high. Oh yeah, this is a big deal because Nvidia, one of the biggest players in the AI space, reports earnings this Wednesday in after hours. Yes, Nvidia, the largest company in the world with a $4.62 trillion market cap and the heaviest weighting in the S&P at 7.63%, which actually beats Apple, Microsoft, Amazon, and many other big players within the AI space and just tech space in general. Now, of course, Mike, this week will be very critical for this stock and just the AI market in general. If Nvidia ends up reporting a negative report or just investor sentiment ends up falling on Nvidia's stock, that could hit many other AI stocks as well. Nvidia has been pretty weak recently too. They've been bouncing off of a key 180 area of support, so they are holding support for now, but if they have a negative report, we could see them drop down, and the options market is actually pricing in an implied move of plus or minus 7.5% with this stock. That would be quite the move from where we are sitting at 191. So if we actually go to the Nvidia chart and we plot that 7.5% drop there, that would essentially put Nvidia under that key 180 support, which would be a pretty bad move to the downside. Now again, if it ends up popping up, it will run up to over 200, up to around 205 at least at the high of after hours from Friday.
Yeah, this is an exciting time to be a trader. We're going to see some big moves either way. A 7.5% move with a $4.6 trillion company implies a $345 billion swing in market cap. So there's going to be some big movement. And like you said, this is going to be a huge test for markets and just the AI trade as a whole. It could either ease fears about AI valuations or inflame them considerably. So this is going to be a very exciting week. As we get closer to Nvidia earnings, we're going to cover this stock even deeper. So definitely tune in as the week goes on. But Tom, Nvidia isn't the only earnings report that's going to set the tone for the year's final weeks of trading. Walmart is also going to report earnings this week, and it's going to give a read on the state of consumer spending, which is the main engine of the American economy. So basically, as we can see here, and as we all know, U.S. grocery prices are more expensive than they have ever been. The average cost of groceries for a family of four is now up to a record $1,030 per month. In January 2017, the average family spent $750 a month, and basically a family of four now spends over $12,360 per year on groceries compared to just around $9,000 that it spent in 2017. So we're in an affordability crisis, and the increase in these prices has just been getting higher and higher. We can see here that the price of beef is actually at an all-time high. And in response to this, on Friday, Trump signed an executive order eliminating tariffs on a wide range of commodities, including beef, coffee, and several fruits, as part of an effort to ease consumer frustration over these prices. So what a time to be a trader, and what a time to be alive.
Exactly, and consumers have been pretty strapped over the past few months. I mean, we've talked a lot about delinquency starting to go up on, credit cards, even auto loans, things like that. So there's definitely been some negative cracks, I would say, starting to form in the economy. And I would think that grocery prices getting this high is definitely one of the biggest concerns for consumers out there. And Walmart in general, whenever they do end up reporting, just keep an eye on them very closely. I think that what they say in the report will even be more important than like what Walmart Walmart does. Like if Walmart ends up flying up to new all-time highs, or even if they end up dipping, I think that the main thing to look at here is, look, how are consumers doing? Like Mike said, that's going to be the main focus there, especially with everything that's been going on lately and just with everybody worried about the economy. If we do show that consumers are starting to feel pressure and that spending is getting less, that would be a negative sign. And if we actually look at the entire earnings calendar for this week, of course, Walmart's a big player in this space, but even Home Depot and Target report on Tuesday and Wednesday as well, and those will also paint a picture for consumers and consumer spending as well.
Yeah, I'm so excited for this week. We have some big data about to come out with the earnings, so it'll be very exciting, and there will definitely be some big moves. Tom, as we look at the market as a whole right now, SPY, it has been a little shaky lately. What's going on here?
Yeah, so the SPY has been actually downtrending over the past few days. We can see SPY was in a pretty clear downtrend from Wednesday night into Friday. Now, on Friday, the SPY actually did start to bounce up a little bit. Now, it did close down 0.02%, but we can see that from open, the SPY performed pretty well. It held that 664 support, ended up popping back to the upside. One important thing to remember is that during downside moves, there will be green days mixed into this. If we actually go to the daily chart of SPY and we go back to the drop on going from February all the way into April, you can see that there were definitely a lot of green days mixed in, especially if we follow like a period of a lot of big red days or very large red candles. We generally do see a couple green days mixed in there, and I think that's exactly what we saw on Friday, was just a hold of support and another green candle come into play. But whenever I zoom into the SPY a little bit more here, there is a big support that's holding underneath, and this week's going to be critical. If Nvidia reports a negative earnings and we do see this support closer to 661.50 to 664, that's a pretty big range, but nonetheless, it's held there 2 times recently. If it does start to break down, that's where I'm going to get a lot more worried about the SPY and definitely watch for more downside selling pressure. At the same time, though, if the support does hold and this higher low trend does start to develop, we could see the SPY recover back up, and the upper end of its recent range, closer to 683 to 685, will be a critical range to watch for if it does end up popping. There is some big resistance in the short term around 678 and 680 as well, so I will be watching for that. But I think one thing to just keep in mind is that the SPY has been very volatile lately. We can see that over the past couple weeks, there's been some pretty big downside moves and even upside moves as well.
Yeah, and like heading into this week, like it can definitely be pretty good or it can be really bad depending on how this data comes out. So I will keep all of these levels close on watch. Thank you for that. And as we all know, with all the talk of an AI bubble and everything else, there's been more and more attention to comparing the current market to that of what we saw in 1929. And I do have to say, based on these custom indexes, the patterns do look pretty similar, unfortunately.
Yeah, they really do. Like whenever we compare the 1920, now keep in mind, this isn't a custom index, so keep that in mind. But nonetheless, whenever we compare these bubbles, like today's bubble is definitely extremely high. And I know that a lot of traders are getting worried about valuation. And whenever you combine this, going back to the AI bubble search terms also hitting record highs, I think that a lot of traders are starting to wake up to this possibility that we are in a bubble. I know that people have been calling for this for a couple of years now, but it seems like that retail traders especially are starting to finally wake up to it.
Yeah, and one thing that's super interesting is that if we look at the actual behavior, not only of retail traders, but also other parties like institutions and hedge funds, we can see retail traders have been buying the dip nonstop, and they've been rewarded big time for it, which is great. But what we can see here also is that basically, if we look at instances where the S&P 500 is down 1% or more, we can see the net buying or selling from each party here, and institutions are now finally flipping to start to buy in. They're joining retail while hedge funds are still pretty net negative in an overall sense.
Yeah, hedge funds have been pretty negative lately, of course. I know a lot of people have been comparing that this year where they say that retail traders have kind of been running the show, right? A lot of hedge funds have been obviously selling. It makes sense, obviously with the market getting to highs and, you have to unload somewhere, right? But nonetheless, retail traders are still buying things up and buying up the dip right now. I'm curious how this current dip's going to go, though. It seems like sentiment is definitely starting to shift a little bit in the short term, and that does worry me. And whenever we just talk about more data where we have a lot of negatives here, for like a special report today, we've actually been seeing bankruptcies getting pretty crazy. We can see bankruptcies throughout this date or through October of this year. It's hitting 655. That is quite a high number. The highest going all the way back to 2010, actually. You can see other years and even like 2024 last year, we're on pace to break that by quite a bit where we saw a 687 reading. So I think that this is an important metric to look at here. It shows that there's a lot of bankruptcies happening where, the market keeps making new all-time highs, but at the same time, again, we like to show these other cracks and just other data points that kind of show that the market might be starting to shift a little bit and the economy could be weakening slightly.
It is a concern when you have the highest number of U.S. large company bankruptcies in 15 years. Like, there's no other way to put it. And since 2022, this number has risen by almost 100%. So there are real risks out there. I think the most important takeaway is that as a trader, you need to position yourself so that no matter what happens, you're going to be okay. Make sure that, yes, if you are capitalizing on this AI bubble, that's great. That's awesome. But make sure that if we do see a pullback, that you're going to be protected because, sometimes when people get a little bit too over leveraged and too euphoric, it comes to bite them as time goes on. So we shall see. Tom, looking forward into this week, how is the economic schedule looking?
We do have an FOMC minutes report coming out. This is pretty much going to show us exactly what FOMC participants talked about at the last meeting, and I really can't wait for this one because Jerome Powell said that there was a lot of differing opinions within the within the FOMC, so I can't wait for the minutes report to come out there. We are going to be getting existing home sales coming out Thursday as well, and don't forget that with the government reopening, we might be getting some data starting to release. Again, there's not really any set dates for those, though.
Sounds good. Well, let's get right into the fun stuff then, which are some setups and predictions. A stock that is definitely on my radar is LRCX, and it is to the downside. We had a recent $1.5 million big money trade with this one, with the 158 strike puts for January 16th of 2026. And not only is the stock weakening, which is good, but we also had recent news where their CFO filed a form to sell nearly $6 million worth of LRCX shares, around 40,000 shares. This is in addition to the, pretty big money trade that we're seeing and the overall weakening that we're seeing with this specific company and the market itself. So LRCX is definitely on my bearish radar. Again, this doesn't mean it has to fall tomorrow, but especially until January 16th, which is the expiration date, LRCX will be on my bearish radar.
Who did that CFO tell that he was going to be selling that position like that? That's pretty insane. Somebody puts $1.5 million into puts, and then out of nowhere, we see the CFO come out and then say that. Of course, LRCX 158 puts will be on the radar for sure into January. It is starting to turn over in a pretty large way. But with my first play, I'm actually looking at NVIDIA to the upside. Yes, what I'm actually watching for is an upside move into earnings. I think that we might be getting a buy the rumor, sell the news situation with NVIDIA's earnings, but whenever we zoom out, NVIDIA did double bottom recently. It has a trend of higher lows even going on around this 179 to 180 support. This is a big range of support, and it's held it very well the past few weeks. Something I also noticed is that NVIDIA has been in a pretty good downtrend over the past few trading days. Now, on Friday, it did actually close above this trend. So what I'm watching for tomorrow morning is for NVIDIA to really break through this key resistance around 191 and continue to the upside into earnings. Now, I'm not going to hold this play through earnings at all, but I think for day trading opportunities coming Monday and Tuesday, we might see a bigger move into the earnings. Again, when the earnings happen, though, the script could flip and anything can happen. We even see companies report really positive earnings sometimes end up falling down because of something said in the conference call or something like that. But I know that that always shakes traders up quite a bit. But either way, I like the way that NVIDIA is starting to break out of the trend here.
Awesome. Another stock that is close on watch is KBE, and it is to the downside. This is another one with some big money put action with it. We can see there was like a $5.2 million trade with the 54 strike puts for June 18th of 2026. It was a put debit spread play, and this is basically an ETF that follows the banking industry. And over the weekend, we had some interesting, weird, and somewhat concerning news where like there was a secret New York Fed meeting with banks, and apparently they held an emergency meeting to discuss money market liquidity concerns after banks suddenly borrowed more than $50 billion in a single day from its main lending facility, which is the highest level in years. And basically, this suggests that short-term cash is tightening fast on Wall Street as funding rates are rising and the usual liquidity buffers may be thinner than expected. So it's not a full-blown crisis, but it is an early warning sign that there is growing stress with the banks right now. So KBE is definitely on my bearish radar. I wouldn't be surprised if it fell more in the short term, but this is more of like a medium term trade. These specific puts have all the way out till June of 2026, which is, quite a long ways away, but I think it could be like a decent medium term trade, maybe even into the beginning months of 2026.
And the technicals actually look really good on KBE here as well. It's almost setting up like what a lot of traders would say is a head and shoulders type pattern. I really like the resistance it's sitting at around that $58 to $60 resistance as well. And it's starting to reject back down. So I will be watching it closely. It did technically go green Friday at 0.19%, but it was definitely a weird candle there for sure. But with my next setup, I'm actually looking at PayPal for a downside continuation play. So what we saw in the short term with PayPal was there was a big range, and the lower end of this range started giving out, and it was closer to $64 to $65. Now on Friday, we fell right through this support and through the bottom end of the range. So what I will be watching for is for this stock to get down to its next support closer to $60. And this could happen more at the beginning of the week, maybe in the middle of the week, but either way, I'll be watching for it to break under $62.80. That's right around the low of the day from Friday. If we end up breaking below there, I will be looking for downside scalping opportunities coming throughout this week. I definitely like the way it's moving to the downside underneath that channel, and PayPal has been pretty weak over the past few years. If we zoom out, they exploded with COVID, ran all the way up to $310 or so, and then now they're trading for right around $62. Definitely not the best past few years for them, but with that channel breaking down, that's really a negative sign in the short term, and I will be watching for more selling pressure.
All right, let's keep it close on watch. And besides that, let's jump right into today's momentum plays. And with the first one, we have Quantum Computing Inc., ticker symbol QUBT, to the upside.
This stock showed a lot of strength early on Friday and even at the end of the day. So there was definitely a lot of strength there. If it can break out above $12.15, keep watching it to the upside.
With the next one, we have CoreWeave, ticker symbol CRWV, also to the upside.
Yeah, CoreWeave actually closed down 1.25%, but a lot of these stocks started recovering up Friday. If CoreWeave can break out above $80.15 right at its high of day Friday, and we're also right above a key $80 resistance, then watch them up as well.
And then with the last one, we have Amazon, ticker symbol AMZN, to the downside.
Amazon closed down 1.2% Friday. If we do see more selling pressure come into the market, Amazon pulls back under 234.30. Watch them down. They bounced off of there in after hours Friday.
All right, so we have these three stocks on the radar for potential continuations if and only if they break through the levels listed. Whether you trade one of these three stocks or anything else, focus on making smart, long-term oriented, disciplined trading decisions. Always keep your losses small, and if you need help with just smart trading, check out the Key Lessons channel in the StockedUp Discord. It is completely free. And besides that, let's not waste any time and jump right into today's $1.95 million big money trade. And we are looking at none other than CCOI. On Friday, the trader here bought the 20 strike call options for April 17th of 2026. This is a $1.95 million trade. For our more advanced traders out there, this is technically a call debit spread where they also shorted the 30 strike call options. The trader here is risking $1.95 million to make $8.05 million, so great risk-reward ratio. CCOI is Cogent Communications. It's an internet service provider, and the stock has fallen quite a bit over the past 2 weeks after reporting earnings that weren't the best. Analysts also downgraded them, and the trader here is positioning themselves to benefit from the stock rallying. Very interesting setup. This trade does have a lot of time to it, so this isn't something that is necessarily looked at to pop tomorrow.
Yeah, that was a pretty big pullback by CCOI, and in order to find support, you actually have to scroll back quite a bit, going all the way back to like 2016, 2014, 2015. There is a big support coming up, closer to $15 to $16. So I will be watching that range very closely. More specifically, it's more around $15.70, being that low there from 2015. But if we do see this stock start to bounce, this could be a pretty advantageous setup here. You know, we see this happen a lot where stocks will drop on earnings and pretty much be like a falling knife to the downside. It definitely seems like the big money trader here is trying to catch this falling knife and take advantage of maybe a short-term rip back to the upside. Of course, if it gets all the way up to 30, that would be fantastic. But as long as we could just see a nice short-term pop here, it could be pretty awesome here. And even for like the longer term, this is a pretty big support. And if it does hold up, you know, who knows how long the big money trader is going to be holding this one, right? It goes all the way out to April of 2026, and it's a pretty big trade as well, being almost $2 million. So very interesting here. I will say it's a bit risky with it being a falling knife. Generally, it's hard to catch those, but maybe they know something that we don't.
Yeah, we shall see. Either way, if you are new to the channel, definitely consider obliterating that subscribe button. We cover big money trades just like this one every single day. This is a $2 million trade, basically, where they're setting themselves up to potentially make $8 million. We cover trades like this every day, as well as the most important news, information, upcoming events, historical stats, SPY levels and analysis, and basically everything you need to know about the stock market. If you subscribe, you'll get our videos recommended to you more often, so definitely consider doing that. But let's also give a giant shout out to today's member of the day, Hose B in the Stocked Up Discord, who had a lot of nice profits with SPY on Friday. So huge shout out to you. Keep up the great work going forward. And it is awesome to see screenshots like this one. If you guys are into short-term trading, definitely check out that first link in the description and the comments down below to get in on the Stocked Up trading floor. It is the place to be for short-term trading. You get access to the big money trades every single day before we talk about them in these nightly videos, as well as so many tools, information, education hotspots, private community, and so much more. Like, for example, we could see if we go and use the big money bot, we can see which big money trades are actively performing the strongest. As we do this right now, we get an instant list showing like GLW call options that are up 992%, GMED call options that are up 652%, Lyft call options up 429%. The list goes on. And if we covered everything in the trading floor, this video would be at least a couple hours long. Definitely check it out. It'll be that first link in the description and the comments down below, and it is the place to be if you're into short-term trading. But we have a very exciting week ahead of us. I hope you guys are as excited as we are. There should be some big news, big moves, and big important updates on the state of the market. Thank you all so much for watching, and let's crush it in the market tomorrow.